Thank you. I wanted to draw your attention to an article that came out today in the Times, which picks up on the evidence, one of the answers that Lord Agnew gave to me in his session, which was about the fact that that bounce back cash was being smuggled out of the country, and he was told this by officials, and he thanked some of them for doing what they could to stop some of that. And they cite lots of examples, and it's pretty devastating, actually, to see how our taxpayers' money was being defrauded when we've got a cost of living crisis, when people are having to choose between heating and eating, and when we've got people really struggling, and billions of pounds has been lost to fraudsters, 4.9 billion. And so in that spirit, it does seem to me that for me the question is, why was there not the kind of accountability to the spending the department that's responsible for allocating the funds, to make sure that departments did the appropriate due diligence, albeit of course we recognise there was a crisis and everybody needed to act fast, but taxpayers still expect responsibility with their money, and it feels like it's been framed in a binary way. We had to get 400 billion pounds out quickly to support people and the economy, and that was our focus. Can you, Tom Scholar, so Tom, can you explain why it is that the Treasury didn't do more to make sure there was that accountability and rigour to ensure that money wasn't lost to fraudsters? And now that we are where we are, you're talking about evaluation, looking at what has happened. What's going to be done to recover as much of the money as possible? I recognise that HMRC has made some progress, but how are you going to make sure the outstanding money that's been lost to fraudsters, nearly £5 billion, is going to be recovered?
Certainly, I'll take the second question first, if I may, and then go back to the first one. So, evaluation obviously only part of the story. The rest of the story is action, prosecution, enforcement, and there's a huge effort underway there. It's an effort which is shared across the lenders themselves, overseen and driven by the British Business Bank, but also law enforcement agencies, and the Treasury's allocated extra funding for that. You've mentioned the HMRC funding, but there's also another 50 million announced for a whole range of authorities in the spring statement a month ago. And the government is completely clear that fraud is not acceptable and will be...
So could you give us a number on how much you expect, with all these interventions and the additional resources to tackle the fraud, how much can we expect to be recovered through those efforts, and by when?
I can say that for HMRC, the HMRC expect to recover a further £1 billion during the course of this year. I'm not sure that we have the same number from Bayes or from you. I'm not sure that you've forecast in that way.
Why don't we have that number? This has been a discussion.
I do have a
global
number. So since SR21, we've invested another 700 million into tackling fraud, and we estimate, and these are quite top-down rough numbers, but we estimate that the return on that will generate more than £7 billion in additional returns over the next 5-year period. We do have all of that broken down, but different schemes return over different periods.
What number do you have in terms of cross-governmental fraud? We've got some estimates of around 29 to 52 billion. What number are you working with in terms of the target?
The 29 billion is the bottom end of a range which we produced nearly a year ago. That's now been updated, and that was pre-COVID. So the range is now at the bottom end. It's 33 billion. That's the latest figure that we're using internally in government. Every quarter we get updated estimates from departments, and we assess what's changed in terms of recoveries, estimates of fraud, how much validation is needed for us to rely on that data, and then every single year we publish it as part of a fraud landscape report.
And you're expecting to recover, you said 7, did you say 7
So the additional money that we've invested since SR21 is around 700 million. That has a an estimated return of additional recoveries of 7 billion.
Yep.
That figure doesn't just include fraud, it involves tax compliance and error as well. It's quite difficult to disaggregate it.
And just on the Times article referred to the 17, that there's an expectation that 17 billion of the 47 billion of government spent on bounce back loan will never be paid back. Now, some of it is because people can't afford to pay back, but some of it is fraud. Do you have a breakdown of what you expect to recover against each of these areas of government expenditure?
Yes, we do. That 17 billion was from the annual report and accounts for Bays last year,
Yep.
and we're currently updating it for the last financial period, and we can break it down into both recoveries, and we try and get an estimate of what's fraud and what's credit loss.
Okay, thank you. And to British Business Bank colleagues, could you tell us how much you expect to recover from the money in your and the associated department for the loans that have that have gone to fraud?
Shall I take that?
Sure.
It's a very complex. Let me just break down the different numbers, because again I do get confused from time to time. So in terms of the fraud checks that we did manage to get in, that prevented £2.2 billion worth of fraud from the lenders' report.
Sorry, with respect, my question was the fraud that has happened.
Mm-hmm.
It's great that you've done that, that you prevented that from happening. That's very welcome. But I'm interested in what you're going to be able to recover in terms of loans and your area of responsibility. What's your strategy for recovering money that's been stolen, basically, from the taxpayer through fraudulent activities?
So, first point to make is the money has gone from the banks, the government money hasn't left government. We have set up recovery principles that we worked on with Treasury, ourselves, the lenders, to make sure that they're pursuing that. The number that you've given there, the 4.9 billion, that was based on the estimate back in for the March 21 accounts. We've updated
the
that.
Public Accounts Committee referred to this number just this week, I believe.
And then we went on to update to say that the revised estimate is now 7.5%, which brings it under 4 billion, still a huge amount that we want to recover. What we're doing very closely with the lenders is sharing back the fraud flags, asking them to pursue the lenders, report on to the enforcement agencies and report back to us what the suspected fraud number is, what recoveries they're making against that. So if you take that, the now 7.5%, the 4 billion type figure, that's the estimate of fraud. What we have in the book now is reports from the lender of suspected fraud, where they have greater evidence around that. So that one's a sampling estimate, one's actual evidence. So that now figure is about £850 million, about 1.7% of the book. Now, I fully expect that number will go up, whether it goes the whole way up to the 7.5%, the 4 billion number. Again, that's how we'll measure the effectiveness, because we'll look at how good the banks are at taking recovery actions, finding those potentially
sorry,
fraudulent.
just to be clear, you think 7.5%, I don't know if I've misunderstood this, you could recover 7.5% of the 4 billion?
No, the 7.5% drives the 4 billion. So our sampling work says that 7.5% looks like probable fraud. So the 7.5% of 45 billion gives you around 4 billion. So then our job is to work with the lenders and enforcement agencies to reduce that probable fraud to as low a number of possible fraud losses that we'll have to pay out in terms of claims. So what we'll be doing is working with the lenders. We're sharing back those fraud indicators, and this is where Cabinet Office work has been really helpful, because they've been able to work with us in the data analytics programme and say, it looks like duplicate issues, date of incorporation, etc. So we're sharing all those flags back with the lenders and holding them to account to pursue those amounts. And again, you might well have someone who in the heat of the pandemic said, I've got an account with this bank and that bank and I'll apply for both. That's clearly fraud, because you're only allowed one loan. But the business may well be very strong and is able to pay back those loans.
Yeah, but I mean, there are examples of people with bank accounts with £2.72 in an account, and they were successfully able to get loans. There's lots of examples like that. I mean, how on earth was that allowed to happen?
No, and of course, with 7.5% of 1.5 billion loans, you could have 100,000. So again,
were they not asked to do basic checks?
They were. Yes, of course.
Why didn't they do them? Do you know? Did anyone ask?
Of course we did, and we're auditing against that. So if you look at the way that we manage the lender portfolios, There are three critical lights that we would shine onto them. We do a lender assurance program where we send out our auditors to have a look at have they followed the recovery principles, have they done the origination processes, were the fraud checks done, and if there are issues there, we'll hold them to account around that. We do the fraud and financial crime work where we're sharing those indicators back. And then we have what we call our guarantee assurance program where we screen and look at those. So there's a huge amount of work going on to hold that. We've estimated the 7.5%, 4 billion, and we're hoping to bring those fraud losses down.
Can I just ask one final question? Lord Agnew mentioned, was saying in his evidence the British Business Bank's not regulated like an ordinary bank by the PRA or FCA, so there's no culture of proper oversight of the bank. And from what I make out, there's nobody in Bays who has the compensating skills to oversee a bank with a balance sheet that exploded. What do you have to say to that? Should you be regulated, or should there be better oversight? I mean, we've heard references to ministers being considered stakeholders rather than ministers that you're accountable to. Is there a culture problem about accountability? Because we also had the Green Seal scandal and the David Cameron fiasco, which this evidence, this committee heard evidence on. Your bank seems to be found wanting.
I honestly don't recognise that. Maybe, Catherine, you want to start and I can build?
Well, maybe just first of all, with regard to the regulation, I think the PRA and the FCA there to regulate banks that hold deposits and have direct relationships with borrowers.
But should you be more accountable to government departments? It seems like you're not, actually.
So we don't hold deposits. We're a development bank. We don't have direct relationships with borrowers. All the schemes that we operate are delegated schemes, so the lenders have the direct relationship with the borrowers and the lenders are regulated. In fact, I believe when the British Business Bank was established, there were discussions with the regulators as to whether the bank should be regulated, and it was concluded that it shouldn't be. In terms of the general governance, we're structured as a PLC. We have an independent board made up of NEDs that are experienced in financial services, and they absolutely do hold us to account. And in addition, we, of course, report through to the Secretary of State for Bays, who is the sole shareholder of the British Business Bank. So I think it's probably a question for the Secretary of State of Bays as to whether he feels that we're sufficiently accountable to him. But I would say there is a very strong governance structure in place and a strong culture of accountability within the bank.
So Tom, did you want to add anything?
No, that account is exactly right. When the British Business Bank was established, there was a discussion about whether it should be subject to some kind of regulatory oversight of the sort that you would have for a private sector institution. But as Catherine says, it's not a deposit-taking institution. It's not a bank in that sense. Is there anything else that needs to be done? Is there anything else then? Let's take that to one side then. That argument was made and it was discounted. Are there any other lessons, I suppose, that can be learnt in terms of oversight and accountability of British Business Bank? But also, are there lessons that can be learnt from the fact that different departments were responsible for different areas of spending during the crisis, and that there wasn't that drive, if you like, that quite much more aggressive drive, one could argue, that might have been, certainly could have been useful to make sure that departments spent money properly and we didn't have such a massive loss of taxpayers' money. On the second part of the question, I think it's correct that each department should be responsible for its own finances and account to Parliament for that. I think there was a very strong drive from the centre, especially from the Treasury, to ensure proper standards. On the first part, it's really a question for Bays, since they're the parent department, but I should say that our experience within the Treasury and working with the British Business Bank has always been very good.
With respect, the strong drive that you mentioned from the Treasury wasn't strong enough to stop this appalling level of fraud taking place during this period. So should there be, is there more that can be done to make sure the Treasury is empowered? It's kind of ironic because Treasury is considered, much more, this all-powerful department that has huge amounts of power across government, and yet in this occasion it seems to be found wanting.
The high levels of fraud, which certainly we have seen, were due to the suspension of some of the normal checks and balances due to exceptional circumstances. And at the time, that was a conscious decision taken by the government in trying to balance off different interests. Each department at the time, I set this out in my first letter to you, set out estimates of fraud and error, and in, I think, every case, the actual instance of fraud and error has been within or less than those estimates.
Okay. So so to sum up, Lord Agnew said on fraud, on the fraud side, it was just a dad's army operation. That's basically, essentially, what the government allowed to happen then.
Don't accept that, no.
Well, the government was responsible, and you said they removed many of the checks and balances, and we ended up where we are.
Well, can I just...
There's a government minister who described it as a dad's army operation.
Could I just make a further comment then on the circumstances of the setting up bounce-back loans and why some of those checks were not enforced in the normal way? The government earlier in April 2020 set up an earlier loan scheme or guarantee scheme, the C-Bills scheme, that required lenders to take 20% of the risk on all the loans, and it also required them to use all of their normal, completely standard commercial lending checks. The experience of that was that many businesses experienced delays in getting their funding, particularly the smallest businesses, particularly those very small businesses, and we have an awful lot of them in this country with no previous lending relationship with a bank.
That's because it wasn't a 100% loan guarantee, but that doesn't mean that there shouldn't be checks, just because it's taxpayers' money.
There were checks, but in order to supply the finance quickly, and this was the essential judgment that the government had to take.
Would you say there was the wrong judgment to take it, to approach it in that way?
Well, I think we'll have to wait to get to the evaluation of the schemes to make that judgment, but there was a reputable survey of the Institute of Chartered Accountants in April 2020 that said that a third of businesses would go to the wall within a matter of days if they didn't get the funding that people were asking for. There was a very clear consensus, I should say, across the whole of the political spectrum and many other commentators that there was a requirement for a 100% guarantee to be dispersed very rapidly, and that's what the government decided to do.
With respect, across the political spectrum, we weren't asking the government to dish out money to fraudsters, and also the 100% loan guarantee does not. There was certainly cause for a 100% loan guarantee, absolutely, but that didn't go with cross-party consensus that there shouldn't be some checks. Do you think that was taken advantage of? That when that happened, then those who were doing the lending, because it's not them, because there was a 100% guarantee, they didn't do the due diligence that was required?
Well, my colleagues from the BBB can talk more about the discussions with the lenders at the time. I don't think that is the approach that they would have taken, since they would also not want to lend money that's not repaid. The issue about the normal credit checks is, and again, the experts to my left might be able to help more here. The very strong feedback from the banks was that, particularly for businesses with no history of borrowing, and remember that more than 70% of the people that took out bounce-back loans had never previously borrowed from a bank for their business, so they had no history of lending. It's not possible in those circumstances for a bank to do all of its normal checks very quickly. The experience of C-Bills was that those checks were taking 2 weeks, 3 weeks, and there was a very widespread fear that if millions of businesses which had been closed by the coronavirus restrictions, on top of that, were unable to access any finance for 2 to 3 weeks, they would go bankrupt with devastating consequences for the economy. So that was the situation that the government was facing. I'll turn to Catherine and Patrick in a moment, but in then trying to design a scheme that would disperse quickly, the question was, what's the most checks that you can retain consistent with a simple scheme that people can access quickly and which will disperse within 24 to 48 hours. That was a scheme that we were asked to design. In consultation with the lenders, We kept as many checks as we could, so they included know your customer, anti-money laundering, checks that the business was operating and had been operating as of the 1st of March, checks with a reputable bureau against known fraudsters. Those were checks that could be taken quickly, consistent with the need to make the lending available very quickly. The universal feedback from the banks that we consulted was that to institute all of the full credit checks, which were the ones that they were operating under our previous scheme, the C-bill scheme, would mean for many companies a wait of several weeks, and in many cases possibly including completely legitimate businesses, no finance at all. And it was for that reason that the government decided to go ahead with the scheme.
Thank you.
You were asking then.
Sorry, I think my time's up, but there'll be follow-up questions from